So, about 6 months ago, at the last crypto asset conference, Felix and I made some colorful predictions and one big announcement. And today is, so to speak, our self-chosen day of reckoning. Our very simplistic view of the world back then was that the crypto assets market is mainly constituted by three archetypes of competitors: traditional financial institutions, neo-brokers and neo-banks, and crypto exchanges. And what they have in common is that they already have a set of already KYC'd customers that can be offered financial products. And our prediction was that those three competitors are all moving towards one direction. That direction being a platform-inspired target state that enables them to offer both, simplistically spoken, Bitcoin and ETF. So that was our prediction, and our announcement was that we want to conduct, with our friends from BTC-Echo, Germany's first and most extensive explorative crypto asset study. So we hope that with this intro we have intrigued your interest in continuing this story together with us. My name is Max. This is Felix Kramer. We are both working at KPMG's digital assets team. And over the next 20 minutes, we want to focus on three topics. Firstly, we want to share some selected results that we found most striking from said crypto asset study. Then we want to have a view on the current market trends that we see in terms of the strategic direction that we described. And in our last chapter here, we want to argue that once the strategic direction is clear, it all becomes about strategy execution and operational readiness. So why should you listen to us? What's in it for you? Basically, KPMG has done a lot of crypto projects over the last 5 years. And now we have with this study a data treasure from over 2,000 crypto investors. And you see a rather depressing price chart here. As you are all probably painfully aware, crypto hit kind of a rough patch over the last year. And in exactly that time frame, we opened up our study for about 4 weeks. Despite having run into crypto winter, the response from the crypto community here in Germany was very positive, and over 2,000 retail investors took part in this study. In a nutshell, the average participant is from Generation Y, rather well educated and rather well off. So much like what we see when we look in the audience today. So the overwhelmingly positive feedback that we got for our study here made us realize that we obviously want to continue this journey, and we are very excited to see what insights we can learn once we have data that we compare year over year. But before we get ahead of ourselves, I hand over to Felix, who will walk you through the selected results of the study.
Yeah, thank you. Hi, everyone. So starting off with a quite surprising result is what we are showing here. So we have brought some selected results we've seen within the study. So what we can see here is 2 segments. So on the one hand, we are showing a distribution between age clusters, but also a distribution between the amounts that are invested within these age clusters. And what we can see is that despite the age class under 25, almost all other classes have invested close to 50% of their capital into digital assets so far, meaning shown by the dark blue scale between 10,000 and 100,000 euros, which is, I mean, we are within that study, having it conducted with BTC-Echo. I mean, we are probably a bit biased. Nonetheless, it's, I guess, quite surprising high result we have seen. And also when looking at the age class under 25, we see that close to 25% of these have invested at least 10,000 euro into digital assets. That might be quite surprising as under 25 years old and having invested over 10,000 euros into digital assets, which can be perceived as a rather volatile investment, might seem surprising. However, we also asked, which we have not shown here, since when the participants of our study are invested in crypto assets or digital assets. And what we couldn't find out is that those investors that have a rather high share of their overall capital invested into digital assets have been growing their capital by investing into digital assets, but seem to have had it before already and then invested it into digital assets, making it a even more interesting asset class. Nonetheless, what we can also see, and which is quite promising for the asset class itself, is that almost 50% of the investors that are already invested today, by statistics, are going to have a rather significant inflow of capital due to inheritance within the next 20 years, providing a rather safe inflow of capital into that asset class, and making sure it's further prospecting and, as we can see later on, going along with the investors' motivation to further invest in these products. Nonetheless, what we can also see from our study is that certain criteria by the service providers need to be met, meaning for customers to participate in services provided by crypto exchanges, certain criteria are quite relevant for the investors. As we can see, security is the foremost criteria for investors. Nonetheless, when looking further down, we see that license in a home country is only at 38%, meaning that the security we can see at 90% is, as we are in the financial service industry, and now that a license is rather an indicator for security, this 90% security rather implies a perceived securities by the investors, so they feel safe. They have a good perception of the crypto exchange they are using. Next, we see that costs are as relevant as user friendliness and the number of tradable cryptocurrencies. The last one to be kept in mind, number of tradable cryptocurrencies, even though we have seen that there's rather a great portion in Bitcoin and Ethereum, and the number of tradable cryptocurrencies being this important probably comes from a fear of missing out perspective rather than an actual usage of the broad variety of crypto assets that could be bought in theory. Okay. So what is also important, next to these criteria we've just seen, it is rather important to ensure that you as a crypto exchange are aware of the needs and demands of your customers. So what you want to avoid is customers registering with a lot of crypto exchanges and rather follow a trial and error approach, searching for the right crypto exchange suiting their needs. Meaning, the more crypto exchanges investors are registered on, the less they use, because at some point in time you probably found the one crypto exchange that provides almost all aspects you want to have from these services, and it caters your needs, and therefore you slowly decrease your activities on other exchanges, which leaves you maybe as a crypto exchange with a lot of customers, but with them not being active, it's rather of a diminishing use for your cryptocurrency and your returns. So as I said in the beginning, with the first page I've described, we've seen quite and Max also mentioned it in the beginning, we also see that there's still a high demand for that asset class, that we see that investors are still very eager to further invest capital into this asset class, as can be seen on this slide, where only the investors that are only in the digital asset space for close to 6 months are rather reluctant, or reluctant is rather too serious, as they are still eager to invest, but not as much as those investors who have seen better times already, seeing that we have conducted this study in the very downturn of the last year. So if you invested 6 months before, you probably suffered the serious losses of all these periods shown here. Still, it shows the asset class, I mean, I already said it before, we are probably biased. However, investors are still eager to further invest, and with the inflow coming, it's probably a good sign. So I was speaking about crypto assets before, but we said digital assets in the beginning. Why did we do so? Because we not only ask about cryptocurrencies, but we also ask about NFTs. And by surprise, or surprise for us at least, we saw that gaming, and by gaming we mean digital artifacts such as in-game assets. Some of you might be playing some online games like Fortnite, where you can buy skins, make up the second most amount of the tokenized assets we have seen within our study, which, as I said, took us by surprise, as we would have expected real estate and art to be number 1 and 2, as they are perceived in the public most well, I think, but the rather young generation, and maybe this can be an explanation for the below 25-year-old, are probably rather active than in the gaming part, where these skins, for example, can be bought and therefore make up such a high amount within these tokenized assets.
So this is an interesting slide for us, because it consists of basically 2 questions that we ask. Question number 1 was, what kind of products do you actually use on your crypto exchange? And the second question, coming back to our hypothesis, would you be interested to trade classical financial products, stocks, bonds, and so on your crypto exchange? And what we found was that not very surprising, but the crypto exchanges currently operate in their comfort zone. So crypto trading and wallets obviously are the predominant usage factors here. And while there is some room for growth in the second order applications of crypto products such as staking or credit cards backed by crypto or trading NFTs, there is a huge untapped potential for crypto exchanges to offer classical financial products.
So when thinking again of the agenda we showed before, maybe I put it on again real quick, if possible. Slightly delayed. So we talked about the pulse check, and we talked about the transition impulse, which Max has just triggered so far. And by that we mean that having these untapped potential, we see a lot of potential for platform setups, as we already triggered last year in our presentation. So what we tried here is to, on the one hand, show what benefits for a platform when choosing this approach, and on the other side, we try to depict a target picture for the rather far future on how a platform can be structured, and also how the convergence of traditional finance and finance within digital assets could look like. So by becoming a platform, it's almost like becoming the Amazon for finance, at least that can or should be your goal, as by having a lock-in effect, you make your customers reluctant to want to change, which then is beneficial to what we've seen before, seeing that by being registered on numerous crypto exchanges, for example, you are not using all of them. So when you can log in your customers at your exchange, you are making sure they are staying. You can also, when offering more services and products, of course, you can aggregate more volume, but you can also use economies of scales in order to be more efficient, which then leads to pleasing your shareholders probably, or investors, and also probably ensuring your job security, as you can by that return the increase on your return on capital. And then by diversifying your portfolio, it means that you can also gain a certain traction within the perception of your service offering, bringing in even more customers. And last but not least, by being more diversified in terms of your service offering, you have a rather homogeneous risk portfolio, which then in the end leads to a rather beneficial cost of capital in terms of regulatory capital. So when looking on the right side, I'll be really quick, I see the time's running out. We have depicted six potential spaces, 3 of the traditional finance area, 3 of the digital assets finance area. As you can see, we have divided it by the traditional financial institution, neobanks and brokers, and crypto exchanges. And for each, we have shown the current capabilities they are offering so far. So fiat, obviously, strong with banks. CBDC, TBD is not an error, but we wrote it here on purpose. So let's see what's coming out of there. Securities, still banks are strong, neo-brokers are picking up. Crypto assets, obviously, crypto exchanges are very strong. Maybe one could have given the traditional banks a dot too. Saving, strong with traditional financial institution, and security tokens. Let's see what's going to happen.
So now we have a clear, concise, and hopefully motivating strategy formulated. It sounds good enough. Namely, become a platform and offer the entirety of asset classes to your customer. Sounds good enough, but that's where the real work starts. Because you have to appreciate that given your starting point today, you are trying to operate in a different market. And in the one market, you might have all the resources and knowledge and people that you need in order to be successful, but in the other market, you don't. Hence, the question becomes, what kind of skills and capabilities do you need to be successful in that new market? And success being defined first and foremost with fulfilling your customer's preferences. So the point that we are trying to make with this slide here is once you commit to that strategic direction, you will find yourself in competition for a very scarce set of resources that you need for your transformation. There are not so many people in the world who understand the market properly. There are limited resources in terms of infrastructure, and that has to fit to your current infrastructure, and so on. These tangible and intangible transition resources are competed for to the utmost extent. So to close out, we want to leave you with a bit of a cliffhanger. You see this transition whirlwind here on the right-hand side. We want to structure that, hopefully for our presentation next year at the Crypto Asset Conference, and ask the ultimate question: should you buy, partner, or cooperate in order to achieve your goals? Thank you very much.